Hello guys, welcome back to my channel, and today I'll be going over small details about liquidity cycle. I got a lot of DMs about if I can create a video about liquidity cycle, so this will be just small introduction into the liquidity cycle. So first of all, these two trades were based on a liquidity cycle. Everything sent to Discord, so this was our buying level, this was our buying limit, stop loss, same thing right here, this is our buying level, this is our buying limit. Everything based on liquidity cycle and some other things. But basically, liquidity cycle, this cycle is happening at specific time, so you can use these Fibonacci levels. Okay, so for example, during this time we would have a liquidity cycle, during this time and stuff like that. This is just example. I use it a little bit differently, but gotta be at specific time. During specific time, we're gonna have a fake break to trap buyers because they're gonna see it as higher high being created. Then they're going to be buying from this level to create a higher high, but price will, instead of making a higher high, it's going to create a lower low. So now we swept buyers, we induced sellers into the market right here, we swept liquidity point, and now we can wait for simple confirmation to go higher. Okay, so we have this range right here. Once we're going to break and close above the 50%, then we can take the retest of the range and continue higher towards this high right here. It's all about trapping people, but you gotta understand when the liquidity cycle is happening, and you gotta understand the major reversal points. Okay, so for example, our reversal point was this level right here. Some people would be waiting for this low to be gone, so price can tap into this FBG and then go higher. But for me, I have my rules, and based on my rules, this was enough. So once I saw that the market closed above the 50%, we entered right on this wick right here, SL below this low, and price just went towards all the way this high right here. Everything was based on liquidity cycle during this trade. So we had break above this high, break below this low, then we close above the 50% of this whole range, we tested the range, and that's it. Okay, so sellers seen this as a bearish order flow. Scalpers on a low time frame seen this as a market shift, so they will be buying from these levels. As you can see, this candle right here indicates that we had some buyers around this level. The trap was done. We induced sellers into the market, we induced buyers into the market, and now we can enter right on this point, because the famous saying, if you don't know where is the liquidity, you are the liquidity. So this trade was super simple, exactly as expected. Same thing right here. As you can see, this would be the high. Okay, so high right here, low right here, swept the low, created this inducement high. This is LCC, liquidity cycle candle. Okay, so it started right over here. We induced sellers into the market. We had some buyers from this level. We swept the buyers, we trapped sellers. Once we close above the 50% of this whole range, we just entered SL below last low, TP, this high right here. And every single time is the same exact entry model. Here on YouTube, I'm not going to show my entry model, but it's something similar to this. I wait for more confirmation than just the 50% of the range, but most of the time it's going to get respected. And the same thing happened on Friday, as you can see right here. Multi-time frame liquidity cycle created this high, this low. So this was LCC, liquidity cycle candle. We had our buying level right here. I'm not going to say why this level, but this is super clean buying level. This was the buying limit, and TP, this level right here. Okay, so as you can see right here, so we started the liquidity cycle. We swept this high, then we swept this low, inducing sellers into the market. Price tap into our buying level. These buying levels are super important, because if you don't have good buying level, you will get stopped out like most of the time. Okay, so let's say if you got some type of order block right here. Me personally, I wouldn't be taking buys from order block. I gotta have my own level. Okay, so once you're gonna break and close above the 50%, we can take this buy, SL below this low, target this high right here. So that's just introduction to the liquidity cycle. As I said, you can even use these Fibonacci levels. They are not the main Fibonacci levels, but this is just for time. During these levels, the traps will happen, and during some other levels, this should be protected low. I'm not going to go into details, but if you understand the time, you will understand liquidity rates and also protected points. Okay, so this is just small detail, and you can see the same thing right here. So we broke this on a low time frame, we broke this low right here, and we created this low, tapping into this level, and just going higher right here. Then we had another liquidity cycle, and this was the buying point. The same week we had this US-30 trade, so this trade was a bit different. Entry point, stop loss, and to Discord as always. But this trade we never had the liquidity cycle, but there was a different way to enter. Let's go for this price action from a liquidity point of view. So we had this fake BOS inducement, then we created this fractal substructure low. So this will be entry point number 1 based on liquidity. And with this way of trading, you can actually ping pong the market with super high risk reward, but the win rate is not the best. So let's say, for example, this will be substructure low. So this could be another entry point right here. Sell below this low. This is the liquidity inducement trading. So we had this break, this high, then we created this high right here. So this would have been entry point. Sell above this high to take the market towards this substructure low right here. But as I said, this is very advanced and this can be for another video, but this was just example of the US 30 trade. Okay, so this was the same trade, but a little bit different execution because there was no liquidity cycle, as you can see right here. I mean, there was this. So I need to see the liquidity cycle on a specific time frame, not just 5 minutes, 1 minute, 30 minutes, but it gotta be the specific one based on other multi-time frame liquidity cycles. US 30 trade, a little bit different, but the NAS 100 trades, everything was the exact same. By the way, you only need like 1 trade per week. Let's say, for example, you took this trade for 8%. 8% on 200k is 16,000, which is beautiful. If you made 16,000 in just 1 day, that's perfect. But if you trade personal, these numbers can be much higher because you can risk like 8-20% per trade, depends on your win rate, and you can make like 50k in 1 day. But with funded accounts, it's almost impossible because most likely they will not pay you this amount of money. So you always want to trade these big funds on your personal account. You can withdraw them with no problem. Okay, so if you got any questions regarding this price action, you can DM me on Instagram or leave a comment below, and see you next time.